Joining us on the phone line is Kapil Kaul, Chief Executive Officer for the Indian Subcontinent and Middle East at CAPA. Kapil, thanks so much for taking our call. Your first thoughts on what was announced or agreed upon yesterday? There are still, fine print that has to be worked out, but the broad resolution is as per expected?
Yes, as per expected. Good afternoon. The expectation that it will be a bank-led restructuring, perhaps to me, was the only option. I don't think there was any other option at this stage. So the bank-led restructuring will give time to the airline, subject to change of the board and governance and possibly bring in more people at the top. We'll give them a time to restructure. Most important, I believe that they have the ability to restructure their costs significantly, and there's a possibility to improve revenues as well. So Jet's turnaround is feasible, and it could possibly happen in 12 to 18 months or 18 to 24 months. So I think the other aspect for banks to realize is there is a strong brand equity in the company, great customer loyalty, a significant brand. And when you get deeper into their business plan, there's so much of cost saving feasible and the revenue improvement possible. So I think the confidence is more about the business subject to improvement of governance, and which has led to this plan. So I would think that there's no other option. Banks had to take that lead, and our expectation is that the lead taken by the banks is limited. We don't see them holding the airline for long. It is an interim arrangement before a new ownership order emerges. But for the interim, this is the best rescue package that could have been structured.
Okay. Kapil, hi, this is Harsha. This reminds me of what happened in Kingfisher when banks came in and converted debt into equity, recapitalized them further as well. Does this, in a sense, solve Jet's immediate problems? And secondly, where is the money going to come from?
So I think Kingfisher's restructuring of banks was at a time when the aviation was going through a very, very tough period. Oil, demand, there were very other infrastructure and regulatory issues. It was a period where the outcomes couldn't have been anything else than what had happened. But in this case, I think the airline industry and the aviation industry is significantly changed. There's a potential for a massive upside as we go forward. The dynamics on ground relate to this transaction led by banks is much better. Second, as for the funding shortfall of about 8,500 crores, it has to be met with the fresh equity. I see our understanding was that they need about $500 to $600 million of equity. They would monetize some of the aircraft assets they have. A recent assessment that we had done, there will be about $350 to $400 million of sale and leaseback opportunities available. It may not happen immediately, but over a period of time. So that monetization could happen. And of course, the banks will have to convert significant portion of the debts into equity. So I think there would be ways and means to address the funding gap. What's important is that they have actually ensured that looked at the business possibly a little more deeply. And the funding gap would take them, if the funding of about 8,500 crores realized, it will give them an opportunity to turn around, gives them about a couple of years to move ahead. So, but there are other measures available with Jet. As I said, equity infusion. You could see another Indian partner coming in. We are already hearing there could be a financial institution who will come in. And the banks will convert debt into equity, and some of the fleets will be monetized. So it's all doable, I would think. Jet's turnaround is doable, and I'm glad that the banks have taken lead, realized that such a large enterprise with so many people critical to economy should be saved, and I think this is the right decision.
Kapil, couple of follow-up questions to things you alluded to. You said a new ownership structure will emerge. You also said that there could be financial institutions that could come in. So you do think that there is a possibility that apart from either Naresh Goyal or Etihad, there would be other investors who would be willing to buy this equity of banks? Because, all of us have been wondering whether they're making a mistake. The banks are making a mistake by converting and holding almost 50% in an airline with no clarity on who will come in and then subsequently buy this equity.
My understanding is that the banks will hold 51 along with another, possibly a government-led financial institution. This is my understanding. Maybe more clarity will emerge maybe by this evening or tomorrow or possibly next week. And the 51% they are going to hold is not going to be holding for long. So I think it may be it may be pretty soon that at a certain point of time in the near term, the banks get out of that and the new investor comes on board. So I think this is an interim arrangement. I don't see banks holding Jet Airways for long, and they shouldn't hold Jet Airways for long. The circumstances dictated that they lead this restructuring. They've done it, and I am glad they did it. But circumstances also necessitate that they create a good governance structure at the board, quality of board of directors, create a very strong governance architecture, maybe some changes in management, and create an oversight which can lead them very quickly to get a new owner on board. So I would see that in the next about 12 to 18 months, Jet's ownership would be very different from what it is now.
Okay, Kapil, one other follow-up question. From what you have seen of Jet's financials, what to your mind is the sustainable portion of the existing debt? I ask in the context of how much debt should get converted into equity for Jet to be in a position to regularly service the remaining debt.
If we are looking at an 8,500 crore funding gap, assuming the monetization of fleet will happen over a period of time, I'm looking at roughly about 3,000 crores plus of the current debt getting converted. 2,500 to 3,000 crores is my estimate. Because I see an equity infusion of about roughly $500 million coming in, and the rest would come through the monetization of the current fleet.
Kapil, you've been tracking the sector for a very long time. I have a slightly bigger question, and this is about, Air India has been in trouble for a long time now. Indigo is having problems of expansion, and Jet is in financial trouble. At what point is this industry going to mature?
Well, I think that's a very good question, Harsha. We've been trying to find this for 15 years. There are pockets where things improve and then we get back to a downside. But there are two critical things that are likely to happen, and that could be a turning point for the industry. One is that there is a rapid refleeting that the airlines are doing to Neos and Maxes, going to deliver almost 10% operating cost benefit. I'm not talking fuel cost, operating cost benefit. We are also hoping that the ATF gets included in GST. Once that's done, that gets another 10%. A combination of refleeting and inclusion of ATF in GST would roughly give them 20% operating cost benefit. I think that will be the biggest anti-cyclical structure that will be creating for airlines. And if they improve utilization, improve productivity, get some technology digitalization of the back end, where I see a lot of finance cost and back office cost can be reduced. We could be looking at, if not in FY19, FY 2021, we could look at a structurally positive direction for the industry, which is fundamentally solid. So there is an opportunity that will present itself that airlines can fix their core, if not all of them, but some of them. So we see that if not from FY20, but from FY21, that may happen.